The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Morning, all you wonderful money masters and treasure hunters. Welcome to the December 17th Marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that each of us need to lead an inspired life, because leading an inspired life, folks, that is what it's all about. And if you take a look at most certainly the tragic events of last Friday up in Newton, Connecticut, they underscores the importance of each of us having having these tools in our toolbox in order to be able to lead an inspired life. As I search through my toolbox this weekend to try to come up with the best tool possible to at least address the situation, the best tool that I could use that could address the situation and also correlate to the markets was this, folks. And that is, with every ending, there is a new beginning. And this tool works for life. As I say, it works for the markets that we trade out there. So really, I felt it was worthwhile to go ahead and touch on this this morning throughout the day. And not that this tool can repair the pain and the sorrow for all of those folks, in Newton, or maybe, just anybody who it touched and who couldn't the events of Friday have touched out there. So it can't repair that, but it does help you to be able to cope with the circumstances of life. And that's really what it's all about. It's being able to cope with the circumstances. We can't control the circumstances. All we can control is how we respond to them. So as I searched, whether it was through the internet or anything that I saw on the television screen over the weekend, what I was struck by most, the person that most impressed me, the person that really I felt stood up and became a leader, and I watched this person really transition. Now, I only saw him, the one time or what have you, but that person was a gentleman named Robbie Parker. So I don't know if you're listening in and you didn't see Robbie Parker, you certainly can go and search for his name. It was an interview that he gave on CNN, so you might be able to see the full video, and I'd recommend you take a look at that video as well as his Q&A out there. Robbie Parker, he's the father of one of the 6-year-olds, that was slain on Friday. Emily Parker is her name. And he began the press conference like this, folks. You got to try to put yourself in his position. I can try to put myself in his position. I mean, the events of Friday, they certainly impacted me. I've got a father of 3, grandfather of 2. And so when I heard about those events, my focus went right to them and what they might be feeling and experiencing out there. But he started his press conference by offering his condolences, his love, his support to all of the affected families, including the family of the shooter out there. Pretty impressive. He went on to say that let this tragic event go on to inspire us. Let it go on to inspire us. Those were his words. And allow us to be more compassionate at all times. And he went ahead and he extended his offer for help to anyone impacted by this situation or anything else. He did it unconditionally, folks. With every ending, there is a new beginning. Now, nature demonstrates this all the time. But in his case here, during the interview, if you listen to the interview, when he was talking about his daughter Emily, he said that she would be the first one. She would have been the first one to have run to offer help to folks out there. And said it was just simply a natural gift. He and his wife didn't know where she got it from. Yet I was watching it unfold, or hear her talk through him, or, just the two of them, the way that they impacted his life, because, he says he didn't know where she got it from, but he was absolutely he represented exactly what it was that he was speaking about, what he saw, as probably one of her best qualities. And so it was really beautiful, obviously painful to watch, but just simply to watch this this individual. You know, when I say with every ending, there's always a new beginning. Nature demonstrates this. You know, in our work here, we talk about the cycles. We talk about maybe there's moon cycles. You know, the Earth rotates on a daily cycle out there. The moon evolves around the Earth every 28 days, and the Earth revolves around the sun every year. We've got the seasons of life, right? We've got fall, we've got winter, spring, summer. Tides flow in, tides flow out. We've got a marketplace. The tide's been, I don't know how you look at this, if it's coming back or down. Do you consider that tide flowing in? Yeah, I call that tide flowing in. And the question is the tide going to be flowing out today? The question is really going to be, is the tide flowing out for Apple today? Every beginning has a new ending. And endings, folks, they herald a new beginning. Life out of death. We generally like beginnings, and at times we celebrate the endings. You know, take a look at yesterday. There were a dozen or so football games or sporting events on, you know, and they ended yesterday. And for some, it was a celebration. For others, it didn't end the way that they wanted to. And maybe it wasn't certainly wasn't a celebration out there. The market moved lower on Friday. For some, it was a celebration. For others, it wasn't. You know, the question is, the more that we allow ourselves, folks, and this is real key, the more that we allow ourselves to trust that everything ending is a new beginning, the less likely that we are to resist letting go of old ideas and attitudes out there. And that is so key. So the stock market, right, it moves in waves of which, you know, we've got a beginning and ending. What we call those swing points. I'm grateful for endings and beginnings, because without those swing points, I couldn't perform Fibonacci analysis. I couldn't perform from a volume standpoint as volume is moving into a swing point. So we need endings and beginnings out there. And for every ending, there is a beginning. We can all learn from the courage of Robbie Parker. It's why I suggest that you go out there and you watch his interview and you try to watch the full thing, because even the Q&A period there, you know, it was a tough situation. I can't imagine doing what he did. He is a leader. He's a great leader. In fact, I believe he is a physician's assistant in a hospital, in the intensive care unit in one of the hospitals up there. I don't recall which one, but, you know, can you imagine if you were in that intensive care unit, who is it that you would want peeking in on you? I guarantee you, he's the guy I would want peeking in on me. You know, we all fear change, folks. We all fear change, yet we wish to grow. Just think about that. We fear change, and yet we wish to grow. We all fear change, yet we wish to become more. We all fear change, yet we wish to expand our horizons and our experiences in all that the world has to offer. Why then do we fear change? For every ending, folks, there is a beginning. We can coast downhill, but mountain climbing, folks, that is really the journey out there. Imagine this, and I'll leave you with this last thought. I talked about the caterpillar. I love being able to use metaphors. So imagine that you are a caterpillar out there, and you've got this strange urge to spin a cocoon around your body. Certain death, folks. Certain death for sure if you're that caterpillar. Now, how difficult it must be to let go of the only life that you have ever known. Yet, if you are willing to trust, as the caterpillar does, the end of your life as an earthbound worm may be the beginning of the life as a beautiful winged creature out there. The power behind change, folks, is that with each ending, there is a new beginning. Emily Parker became a beautiful butterfly on Friday, along with 25 others. With every ending, there is a new beginning, and it matters not whether Friday's events touched you or not. Perhaps you're letting the fear of change hold you back from the great gifts that you have in your future. Let's begin our day here at TFNN, though, and send out all the white light that we can, because that's what we do here at TFNN in order to comfort others, in order to be able, that is just simply our Tiger way as we have the Tiger Nation out here. So, again, great to be back with you, and let's just go take a look at these markets out here. So the futures market right now, Dow futures up 15 with fair value. Looks like the Dow will pop maybe about 50 points or so. ES Mini is up about 3.5 points. That's what we're looking at here on Tiger TV. If you're watching us on Tiger TV, maybe you're listening on the radio, maybe you're listening on your mobile device at tfnn.mobi. We absolutely appreciate you doing that. If you're just listening on a radio, you can always catch an archive of this show on Channel 9. So we can see here as we take a look at the ES Mini. This is a 30-minute chart. Yesterday evening, as the futures opened up, they popped up moving into a swing point. The swing point on the ES Mini really being out here at about 3:30, 4 o'clock in the morning on December the 14th. The high of those levels being about 14.19. Didn't get all the way up there. Got up to about 14.1725 at 7 p.m. Last evening. Came down and, in essence, closed the gap down here. Now, the gap that we're looking at was from the close at 415 to the high of the 415 level on a 30-minute chart. That was 1409.75. The low that we saw in the 30-minute chart came down to 1409.25. So came down, closed that gap. Has made about a 0.618, a little bit over a 0.618 retracement from the low of Friday afternoon. That came in at 2:30, that low out there, 1405.75. If you just simply go from that low to the high that came in last night at 7 p.m., you'll get a number of about 1410. So it makes a 0.618 retracement. The question is the ES Mini setting up an A to B equals CD down, just like it did, an A to B equals CD up, really would be making a Gartley sell pattern on the ES Mini. We can see that it made its first A to B equals CD down. That's where it was a 1 to 1.272. It was really about as exact as you can get. It's why you want to understand your ABCs out there. You want to understand the patterns. If we take a look at the possible A to B equals CD up, and why I say possible is because if you just simply take a look at the relative strength, it's kind of in the middle of the road. So we can go either way at this stage. I suspect that that the market wants to make an A to B equals CD up. That A to B, the 1-to-1, takes you to about the 1421 level, 1424, 1 to 1.272. Now all we have to do is just go take a look at the retracement here off of the high. And again, we're looking at a 30-minute chart, so it works this way on any chart, 10-minute chart, daily, weekly, monthly chart out there. So if we go from the swing point high, the A point of the A to B equals CD down, this is at the price point of 1432.50, all the way down to the low that came in Friday afternoon. You'll see Sweet 618 is at about that 1422. So it's right in the range here with regard to A to B equals CD. Looks like 1421, 1424. You've got the 0.618 level at the 1422 level. Looks to me like that is what the market wants to do. That would be setting up a sell pattern. Of course, what you have to do is you've got to be paying attention to the candles out there. Why? Because that's where the bulls and bears are giving you signs on a continuous basis out here in the marketplace. And you want to be able to learn that. It's really all about learning the psychology of the marketplace. And really, if you take a look at all the conversation, everything over the weekend, if you take a look at Robbie Parker out there, it was really all about psychology. The market is all about psychology, and you want to learn to be a psychologist of these markets. And that means you want to be using leading indicators, and you want to be able to use tools such as Fibonacci retracement and expansion, because mathematically, for whatever reason, I don't know why it works. I just know that it works out there. You want to make sure that you have these tools because they act as magnetic areas. When one area fails, you know where the next one is. If you're going to trade, it helps you to understand where it is that you're going to be placing your stops out there. Maybe during the next show, the Money Masters show, we'll talk a little bit more about psychology, maybe about Robbie's psychology out there, because folks, there are always, it's all about decision making in life. It is all about decision making. Decisions, folks, they absolutely they shape your destiny out there. And decision-making comes from two things: your state of mind and your blueprint. And all you need to do is be a psychologist of the markets out here. 877-927-6648. Give us a call, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and before we let's take a look at the Apple. You know, key chart out here, most certainly today, closed at 509.79. Actually got below the low of my hammer candle, Stevie's hammer candle. That's the low of November the 16th out there. That low was 505.75. Got to a low on Friday of 505.58. Now, there were 36 million shares down there. That was 36 million shares going against 45 million shares. So you had a rejection of a swing point on lighter volume out there. Of course, volume has been accelerating on the way down. If we take a look at Apple's been all over the board here on a pretty narrow trading range here in the pre-market. Last trade just fired off at 510, so it's only up about 21 pennies at this stage. But it is traded a little bit lower than the close also here in the early morning session out here. So Apple's going to be key today. For those folks that trade Apple, are looking to possibly put on either a long or a short position, what you need to know about Apple out here is you need to understand what the average true range is of anything that you trade. Because if you're going to, the one thing is, even though You've got a swing point low that was tested on lighter volume out here, 505.75. You know, that does not mean that that's where price would stop, or even the low of yesterday. You need to understand that everything has a daily average price movement out there. And if you use stops that are just simply too tight, psychologically what you're telling yourself is that you know where the stock is going to travel to. And there's a great tool on the homepage of tfnn.com. In fact, if I go there right now over on the left-hand side, I think it's out there. Let's go see if it is. It says the power of position size, so it most certainly is. You want to make sure, and if you, you've got access to that for 30 days for free. I'll actually put the position size calculator up here on the screen for you. There's a video teaches you how to actually use it. In the case of Apple, the average true range from high to low during any day is $18 out there. So it says if you're going to trade Apple, you got to have a really wide stop out there because you can be right on the trade. Have too tight of a stop, and that would be unfortunate. You're just simply putting up your money, and if you make your stop too tight, in my opinion, you are putting something at risk when you might have been right on the trade all along. You just simply got stopped out because of the average true range out there. Let's go to Gail in Tampa. Gail, thanks for calling this morning. Thanks for holding. How are you today?
Good morning, Steve. I just wanted to have a good little chat with you and see what your psychology mind thought about Baidu.
Okay, well, tell me what you're doing and what time frame it is that you're trading on, and that will make it a little bit easier.
Well, I've really shorted this quite a bit through the year, and I was just curious if there's going to be another short between now and the end of the year is what I was really looking at.
Got it. Okay. And so you consider just kind of a swing type trade? You say you've shorted most? Okay. So if we take a look at Baidu, folks, closed at 97.40. Baidu is going to, let me get rid of some of the lines out here. This looks like it's an old chart. So let's take a look at the most recent events here on Baidu. On Baidu, you'd be looking, Gail, first at the December 4th downdraft. That's probably what you're looking at, which had 12.5 million shares on the way down. So that was the last sign of institutional selling that was out there. It's come back into the day where it broke down, which is December 3rd. That was the prior session where it did volume of 4.2 million shares. The volume out there was, as I said, 4.2 and 12.4. Yes, on Friday, does 3.8 million shares on the way up, gets up to it's coming into these swing points out here on November the 29th and November 30th out there, coming in there with lighter volume. What you'd like to do is you'd like to see it at least test those. Now, there's also a downdraft candle right here that hasn't been tested, and that is November 14th, 16 million shares to the downside. So all of the pressure is to the downside from a volume standpoint. What you're just looking for, is where is the best place of entry. I say let Baidu test the November 29th area, let it test the high of November 14th to give you a piece of information. If it closes above 98.65, then Baidu could easily run up to the November 13th level where it broke down, and that would be somewhere around 103.62. We take a look at Baidu, just see what the average true range on a daily basis of this stock is, just so you have that for any of your trading. And we'll see it's $3.16. So whatever position you might take on Baidu, your stop, in my opinion, needs to be at least $3.16 outside of the prior day's close out there. Where Baidu has a great short opportunity, it's untested here just yet, would really be at the where it really started to break down, which is the gap of October 31st. That high is 110.50, and you'd love to be able to see it get all the way up there, test that, fail on lighter volume, because that could be set in a very, very nice resistance area. But it's got some work to get all the way up to 110.50.
Right.
Does that help you out?
Yeah, I just wasn't sure with everything going on with Washington and then uncertainty if it was going to have a little breakdown before now and the end of the year.
Well, stay on. We can go back to Baidu, back to Gail as soon as we come back from break here, folks. 877.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now. Darryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Darryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
And we're off to the races. We got the Dow up 40 points, S&P up 5, Composite up 5, Russell up 2.5 points, Microsoft down a penny, Intel off 2, Google up $5 and change, Apple down about 30 cents here right now. We're going back to take a look at the Baidu chart with Gail in Tampa. So so your question there as we were going to break, and I didn't catch it all.
No, it was just the if there was going to be another opportunity between now and the end of the year because of people, thinking there's going to be tax ramifications for next year higher, as well as people just wanting to dump stock. didn't seem like it was going to keep holding up because I didn't think the volume was quite as strong on the way up.
It absolutely has not been. Baidu offers you a couple of different spots to, take opportunities at for a trade to the downside. You'd like to see it give you, a little bit more information out here. That could just simply be a failure of the most recent swing point. The ideal trade is if you see it move up, and you'd really like to see a bearish candle before you go ahead and pull the trigger. And you don't have that because as it's come off of the bottom here from December 6th, even though it's done it with light volume, the only time that you saw any bears in here was December 13th. And what I mean by that, not just simply that it was a red candle, a red-bodied candle, but you can see during that session, you got this little bit of a high wick area out here, and it just simply showed that was just simply one day where the bears were in control. And you want more than that out there. You think you can be patient here. It might fail up at this swing point level from November 30th, 99, 31, 99, 40 out there. If you get a close above it, it really sets up your more ideal trade, which is both moving up into this high volume bar from August 23rd. That low is 110, which happens to be right at the top of the gap from October 31st. So without, and even when it gets up there, what you want to do is you want to wait and you want to see some type of bearish candle out there. And that's what I would be waiting for on the Baidu short.
Okay. Thanks so much. I appreciate it. And have a wonderful new year.
Thank you. You too. Happy holidays to you.
You too. Bye-bye.
That's great. So let's go take a quick peek here at Apple. It's off $1.40, and we'll go ahead. We'll put Apple on we'll put it on the ultra short-term chart out here. We'll put it on a 5-minute chart, and we'll just simply watch how this trades. And the reason is because we go back and we can certainly take a look at the volume pattern from Friday out there. So we'll put it on the 5-minute chart, and the volume at the low at that 5.0. Where was let me refresh my screen out here. Give me a moment here to do this. My apologies. Just get all the proper bars out here. Otherwise, it's going to be impossible. Okay, so as it was making that low of 505.58, it did it at the time frame of 3:25 in the afternoon, 451,000 shares down there. So far at the open, which you would expect, pushes down with 1.2 million shares. So we know it's up against Stevie's hammer candle, and those hammer candles, that is really from a psychology shift in the marketplace. That was November 16th, the low out there, and it's going to be important to watch that area. Now, on the 5-minute chart here, we can see that as it was also moving down into those lows here, and this was at Friday, you can see where it was utilizing the relative strength indicator, at least the way that I do utilize it here. You can see what it was getting into was an oversold area. If we go back and we take a look at Apple on a daily chart, we can see on the daily chart also doing the same thing. And now, of course, and I'm not instructing you to go long. Trust me, I'm not instructing you to do that simply because of the volume on the weekly basis as it was making its way down. And it does look to me like Apple does want to go ahead and break through that hammer candle. What it was doing on Friday was just chipping away here. But all you have to do is you don't have to take either side of the trade here just yet. You can just simply wait and let the bulls and bears, they'll give you a good enough signal. If you are going to take a trade, make sure you respect the average daily volatility of $18 out there, whatever it is that you do. Normally with Apple, of course, normally when it comes down into this oversold area, you can see it's where it tries to form a little bit of a bottom. Certainly on the 16th it did as it got down there. You can see anytime it gets down, below the midpoint, the last time was back in July of 2012. That formed that little island reversal candle. That was a candle formation out here. Well, what would you be looking for as far as a long trade? You'd like to, quite frankly, take a look at this. You could get an island reversal, not today, but here we had a 3-candle island reversal. Goes back to the July 25th area. So those of you that might be bullish or wanted to take a long trade in the markets or were looking for signals out here, you want to watch this chart. I don't know that that's what's going to happen, but we did have a gap down on the 13th, from the 13th to the 14th. The top or the bottom of the gap, depending on how you want to look at it, the low of December 13th, maybe a better way said, 525.80. The high of Friday's session was 518.13. We'll just see how this trades out here. But this was a great candle signal, so you didn't necessarily have to take a trade during either of these sessions down here, and I'm referring to July 25th, the 26th, or the 30th out there. You could just wait for the candle pattern to form. So you could get now, you're also also at a very important low where the bulls certainly reared their head in on Apple on that November 16th level. You just simply want to open yourself up to all the opportunities and just simply be patient and wait for the signal. Likewise, you get a close below 505.75 on a hammer. It's a beautiful saying out there, if you're long, you're wrong, when you get a close below that. And the beauty of this is that you're talking about a 200-point move. And quite frankly, it's more than a 200-point move if Apple breaks that hammer candle and it does it on volume. Now, 45 million shares is really not the number that you're looking at. That happens to be the swing point. The real volume that you want to look at is all the way back out here. Here's where the supply line is. That is February 15th, 53 million shares out there. That's what Apple is trading inside of right now. That high is 514.26, and the low is 496.89. It's trading at 512 out there. That you want to always make sure that you're always going back over to the left-hand side of the chart to see and look for volume. We want to be able to find some volume bars. You want to see if those folks are still around out here. So on Apple, I think we've covered it enough, at least for the time being. Let's go take a look at some of the other stocks that are moving out here. We've got Google is up. Google's the big leader in the clubhouse right now. So let's go take a look at that chart and see what that is doing as soon as I can get over here, because I know I've got Google up on my system here. Google, where is it? G-O-O-G. Okay, it must be in front of my eyes, and I don't see it, so we're just going to go ahead and put it up here anyway. So let's go put up the Google chart, see what it is going into. GOOG is a ticker symbol, trade now to 710. Of course, that is moving into a huge supply line. And let's see if it was able to take out a B point with volume. The B point that we're looking at here happens to be December the 3rd, 2.1 million shares. It got up with 3 million shares. So did it take it out? It closed back below it. So it came back below it on Thursday's session out here. But let's go mark this anyways. Let's mark the swing point, the B point, and let's mark the volume area, because you do have Google trading up above that here this morning. Let me get rid of some of the lines out here. That way it'll be a little bit easier for you to follow on Tiger TV if you're watching us on Tiger TV. So I'm looking at the swing point the day of December the 3rd out there. And again, that volume on December the 3rd is 2.1 million shares. Google did get up over that with 3.4 million shares, closed back below it on December 13th. So it's pushing into that swing point with volume. You can see here, you know, what well, let's just take a look at what that A to B equals CD could be if it were to actually form. See if it takes us up to the top of the range out here where it really broke down, which is the October 18th level. I believe it was the earnings release the night before that really sent that off. In fact, it was, because I think Google was, they had stopped trading on it for maybe they released earnings early, something along those lines. My apology, because I can't totally remember. Anyways, you're going to want to be watching Google here today. If it closes above 705.89, does it on more than 2 million shares, it would be setting up a possible A to B equals CD up that would take you all the way up. The 1-to-1 would take you all the way back up to where it broke down with 12 million shares at the 759.42 level out there. And so you just wait for this pattern here to unfold. Let's go take a look at some of the other markets out here. As long as we are surfing around, let's go take a look at the currency market. In the currency market here, you had the U.S. dollar, Japanese yen currency pair gap up last night. This is the 10-minute chart that we've got up on the screen. We'll take a look at the lightning bolt, the A to B equals CD pattern. So it gaps up last night on news that the party, I forget the letters for the party, like LDP or something like that. The party that wants to be the Uncle Ben in Japan, which is unlimited purchases of bonds out there. They were victorious last night. Sell the news. That's exactly what happened so far on the Japanese yen. Gaps up to a price point of 84.30. Forms an A to B equals CD down. Completed that A to B equals CD down. Did a little bit more than a 1-to-1 when the bulls showed up at about 6:40 this morning. And now all it's doing, it did a little bit of a retracement. If we just simply take a look at probably this little trend line out here, you can see that's all it's doing. It moved back and retraced back into that level at about 8:30 this morning. If we go put this on a daily chart, which we will do here on the Japanese yen. You can see the Japanese yen also making a 100% move of a move, getting up and over the swing point from March 15th out there. Typically when you do that, you do something else. You travel sideways. Of course, the Japanese yen here is certainly in overbought territory, so it needs to do something else. I suspect that, it will at least move sideways, pull back a bit here. It may give us an opportunity to enter a trade on this. And it does look like a good trade setup if you go ahead and you take a look at the weekly and the monthly charts out here of the currency pair. So on the, of course, I'm not going to look at this. That weekly chart, if that's how it were to end, that would be a shooting star, which is the exact opposite of the hammer candle as we were looking at in Apple at the bottom. You see shooting stars up at the top out there. But if we do take a look at the monthly chart, now on the weekly chart, what you can see is it certainly broke the trend line coming off of March 16th. All the way down to low, and when it broke that trend line, it did it with what? It did it with a hammer candle the week of September 14th out there. This is how a hammer candle is supposed to trade. It's supposed to pull back into about the midpoint. That's what it did the week of September 28th, and then that was also testing. As it was doing that, it was testing that trend line, and you can see what it has done since then is just simply moved higher with conviction. However, it has made a 100% move of a move, really coming up against a triple top area as we pull this back. So it's got some pretty decent resistance up in this level here, and that's something that you want to be paying attention to. We'll draw a line across the screen. Let's make this a red line across the screen so we can see that up in this level, the Japanese yen does have resistance. So until that area is taken out, suggests now that maybe what we see is more than just a sideways move. Maybe what we do see here is a nice little retracement that would allow us in on the Japanese yen. At least that's how the weekly chart is setting up. Let's go let's take a look at the monthly chart here. Oh, man, I got a piece of bad data. So I can't look at the monthly. I'll have to try to repair that this evening or something. That's too bad. Okay, but the weekly chart is just fine. Let's go take a look at, as long as we're taking a look at the yen, let's go take a look at the Nikkei. See what the Nikkei has done out here. We know that has been on a strong run. That also gapped up last night and sold off the entire evening, closing at its session lows out here. So the Nikkei, depending on what kind of trading session we have here in our markets, Nikkei could be setting up a island reversal out there. We talked about that on Friday. In this case here, it gapped up. It moved into a retracement level. And the retracement level, let's go from the highs. This is March 28th. All the way down to the island reversal at the bottom, which was on June the 4th. And what we can see is it really closing at that 0.786 retracement level, which is about 9,025. It closed at 9,028. So it is flirting with that area. Of course, what we do know about the Nikkei is that if you take a look at the bars out here, that the widest bar on the way down, so you don't necessarily have to have volume. You can see where the bulls and the bears were and where the bears really began taking control on the Nikkei as it was moving off of its highs back in the March time frame, the end of March, was really on this trading session here of April the 4th. You can see it's the widest range bar on the way down. Quite frankly, it's the widest range bar even if we're on the way up here. So that is some resistance that it ran into. We're going to want to be paying attention to the Nikkei. Of course, if the yen does start to pull back, that should put some pressure on the Nikkei as well. That might also be setting up a nice trade. But we can also see on the Nikkei, you can see here that it is now beginning to make higher highs and higher lows out here. So that is that's a nice looking stock chart as it came off of the bottom. Let's also go over, as long as we're in the international market, let's go take a look at the DAX here, see what the DAX is doing. Really having just a sideways day, trading out at 75.89 on the DAX. That would put the DAX down by $6.95. So the DAX here makes a 1.272 expansion of swing points, gives you a bearish engulfing here on December the 13th. A little doji on the next candle on December 14th, confirming that it is tired. And today, trading just a little bit lower. Some leaves, just it's autumn time, just beginning here in the DAX as leaves are just slightly falling off of the trees. But really, the DAX here is showing its strength, still trading at that 1.272 level. If the DAX decides to take this out, where will it go next? I'm glad you asked me. It'll go up to 1.618 into that 78.04 level. When we come back, we're going to go take a look at the MLNX Technologies. One of our listeners would like to take a look at MLNX. We'll go ahead and pull that apart. 877-927-6648. Dow is up 51. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks, and let's go take a look at the MLNX Technologies. MLNX is the ticker symbol. That's what we've got up on our screen here. You know, fundamentally great-looking, fundamentals on this. If we just take a look at quarterly earnings, and I go back to their December 31st quarter, They are on an annual, December 31st year end. So if we take a look at operating income, 1.48 looks like a million. 1.48 million, then 13 million the quarter of March 31st, then 31 million June 30th, and then 49 million. So you can see nice rapid growth out here. Of course, if you look at the stock chart fundamentally says there's some problems. There's some real sellers in this stock chart. So let's go and take a look at the question out there is, will MLNX get back up to its highs during the next 12 months? We'll get up there. And the highs that we're talking about, September 6th, folks, MLNX gets up to 120.05. Does it with 852,000 shares. Now, up to that point in time, in fact, if I take this stock chart here and we just move it off to the side, just like that. So now let's just assume that this was the stock chart. Had two real nice signs of strength here coming off of the bottoms, and really three signs of strength. Let's come all the way back to January 25th, 2012. The high on that day was $32. There was 716,000 shares. Next day, it gaps up with 1.8 million shares. So you had wide price spread, you had accelerated volume. Then the next time you really see wide price spread and accelerated volume is the day of April 19th. Gaps up again, another wide gap out there. The gaps up to a high of 64.57, does it on 5.2 million shares. Then you get a third gap, an even larger gap, both percentage-wise, I don't know about percentage-wise, dollar-wise most certainly. That's on July 19th, 6.3 million shares. So everything looking pretty good up until that point in time, even having a high-volume bar out here on September 4th with 2.1 million shares as it makes a high out there. Then what you have is ba-boom. Coming out of this is you've got volume coming off of the high, September the 7th, 2.9 million shares. That was your first signal to go ahead and get out of Dodge. Now, what will happen is that was a breakdown area. If you take a look at a stock, oftentimes it'll come back up to that level, test it, do it with the gap. Okay, let's see what I do there. Get rid of that. How do I get rid of this? My apology here. I got my little Dell data safe that comes up every now and then and decides that it wants to join the party. There we go. So it breaks down on September the 7th with 2.9 million shares, moves back up there with 1.5 million shares, gives you a bearish engulfing as it closes that gap out there. That was your next sign to just simply read the psychology of the marketplace of what the bulls and the bears were doing. This equity here, then that gave you really two chances right there to go ahead and get out of the equity. If you're just trying to follow the money, what you want to be paying attention to is volume, because if you look at that volume, 6.2 million shares, just as it was going up. Remember, we saw increasing volume as it was gapping up. Now what you see here is volume again on the way down. October 18, 2012 here, 6.9 million shares out there. Did not have enough strength to even get back up to that gap level out here. Now it's trading at $64. This has gone from $120 to $64 from the time frame of September 6th to now December 17th. So it has done it in 90 days time frame. This thing has been cut in half in essence. And the reality is it does not have a high volume high. This has volume off the highs. There is no reason that this has to go back. And what this says here, folks, is that if this area here fails, which was the breakout from April 19th, this stock wants to head to the bottom of that, which is $55, more likely $42.86. That is on MLNX Technologies. I don't see any bulls here. Thanks so much for being here, folks. Have a great Monday. Stay tuned for the Money Masters show. That'll be up next. If not, have a great day and look forward to seeing you in the morning. Bye-bye now.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today. because your journey to extraordinary rewards is just one click away.